Right, glad to have you back. Nigeria's foreign exchange reserves fell by $1.31 billion in February 2024, reflecting sustained external pressures amidst the recent appreciation of the naira. Data from the Central Bank of Nigeria showed that the reserves declined from $39.7 billion on January 31st, 2025 to $38.4 billion on February 28, 2025, representing a 3.3% drop within the month. The decline in February was slightly higher than $1.16 billion drop recorded in January, highlighting the continued strain on the country's external reserves. The steady depletion of the reserves has raised concerns amid rising speculations that the apex bank's sustained interventions in the foreign exchange market aimed at bridging liquidity gaps and stabilizing the naira have come at a cost of reducing external reserves. Let's start the week. Let's talk to Mr. Tajudeen Ibrahim. Is Director of Research and Strategy with Chapel Hill, Denham. He joins me via Zoom for this conversation. Mr. Ibrahim, it's good to have you. Good afternoon.
Good afternoon. Thank you so much for having me on the show today.
Yes, I think it's worrisome for us to still have this discussion, thinking that for the Apex Bank to continue defending the naira, we would keep having this decline in our reserves. Is that a step in the right direction? Is that a good thing to happen to us at this time where we're trying to balance some economic challenges?
So I strongly believe that that is the right thing to do. It is the step in the right direction. Because when you look at the FX reserves and the depletion that we are talking about, it is justifiable for the following reasons. Number one, we have seen a situation where FPIs, that is foreign portfolio investment inflows into the economy, have improved, and that improvement has somewhat emboldened the CBN to supply to the market. And the second way to look at it and consider if it is suitable for the reserves to be utilized to support the naira or not. The second thing to look at is the exchange rate itself. Exchange rate has been broadly stable, and at some point in this year, it has appreciated, for the currency to trade as low as 1400 level, which is something that we find interesting, particularly investors in the capital market. So if the exchange rate was not stabilizing and the reserves are dropping, it could have been an entirely different view. One could have been a lot worried that the reserves are being utilized and the exchange rate is not stable. But what we have is that the reserves are being utilized, and the result is showing or reflecting in the stability of the exchange rate. And I believe that that is what Nigerians should be focusing on. That is what we should be looking at. If the exchange rate is not supported, we would have recorded a lot more in terms of negative economic impact that a weaker currency will have had on the Nigerian economy.
Let's take it a step further. With your assessment of the level of stability that we've seen in our foreign exchange market in the past few months, and vis-a-vis what is, because it's expected also to support the budget projections and all of that, are you saying that the naira is now appropriately priced?
I think the naira is not appropriately priced as we speak, because the valuation still reflects that the naira is undervalued. When we say that the naira is undervalued, we mean that the naira should not be trading as high as 1,500 naira. The fair value that we consider is the fair value of the naira against the US dollars is about 1,025 naira. So, which means that currently the market is not capturing the bulk of the economic indicators the bulk of the economic benefit around the Nigerian naira. Accordingly, the market is pricing it at around 1,500 naira, which indicates that the currency is undervalued. If we look at economic indicators such as the current account balance, which has been in surplus for the bulk of the past in sort of quarters, that is on the one side. The second side also, if we consider all of the improvements that we are seeing in terms of our export earnings, particularly oil and gas exports, and that is another factor for consideration. The third factor for consideration is what we are seeing in terms of, import substitution, as we now currently, largely speaking, refine crude oil in the country and the finished product is sold in the country. So we have a situation where we are making savings, dollar savings, on the back of that, strategy. So there are no compelling reasons for the currency to be trading at 1,500 naira to the dollar. What we should see and possibly watch out for is how the currency will trade. That is what I think we are currently, working on. No doubt, we still have a bit of challenges, but the reality is that we have to pass through all of those reforms. I give you one very interesting example. Nigeria is one of the countries across the world where the government has put in place policy to say that we are going to be selling, as a government, we are going to be selling crude oil to in local refinery companies in local currency. You don't really find that in many countries across the world. It has been, in my mind, a major step in the right direction. The second thing that I think is also happening is that we have allowed flexibility around our exchange rates. We have embraced devaluation to ensure that our currency is appropriately priced in the market. That is another thing that has materialized, and you don't really see this in major emerging and frontier markets for us to have allowed such huge devaluation just so that our currency reflects the fundamentals. I think another thing that I believe is also important to put on the table is how we have been attracting and engaging foreign direct investors by the recent visit of the government and its cabinet to major countries to attract more foreign direct investment into the country. That, to my mind, is another thing. All of these things may not really be meaningful completely to all of us in Nigeria as we speak, but my sense is that over time, when we begin to see the benefits and the positive impact, it will reflect positively on the economy as we go into the next 1 to 2 years.
And that's really very topical. Looking at the next 1 to 2 years and all of these policies, many would say they started to pay off gradually. So what would be now your own projection? For example, we're expecting the rebased GDP figures to be out anytime soon. We've seen that of inflation out already, and we saw what happened considering all that was factored into that basket. But now that we are looking at the bigger one coming in, what do you also make of that? And the worry that some analysts have brought to the fore that if the economy grows so large or looks like it's grown so large, we might begin to want to borrow more, or believe that kind of what word do you think would be ideal now? But you know where I'm headed. What do you think? What impact do you think that would have if Nigeria becomes the #1 biggest economy across the continent?
So becoming the #1 economy across the continent is not something new to us.
Yeah.
This is something that we have achieved in the past, and the reality is that we can achieve it again. We had a bit of a setback because of the devaluation of the naira against the US dollars.
Yes.
If not for that, setback, naturally we remain the largest across the continent. In terms of the outcome of the rebased GDP, I think between $500 billion to $700 billion, will be, the number for me when I take a look at my bullish sentiment. And my sort of, bearish sentiment is that the number will be around $300 billion to $400 billion when the GDP, when the rebased GDP is released. I think in either way, what we should all bear in mind is not so much of how the government will be borrowing more just because we have a larger economy in size. That should not be the focus. That should not be the worry. I think the only time people should worry when we borrow more in the economy is when that borrowing is not put into productive projects. When the borrowing is put into productive projects, we should really not worry at all, because it means that there is going to be economic benefits from such projects that will also underpin economic growth over time. That is one. The second thing, and what I possibly consider a more compelling factor for consideration, is that investors across the world invest in large economies. Before they come to your economy to invest, I'm talking about foreign direct investment in this case. Some of the foreign investors do not want to invest in countries that are way too small in terms of the economic size, economic activities that they expect should be taking place in that economy. So if after rebasing, our economic size is published to be around $500 to $700 billion, which is my bullish sentiment in this case. I believe that Nigeria will be able to attract more foreign direct investors into this economy, because it means we will now be more compelling than most emerging and frontier markets across the world, where most of these advanced economies invest by going there to set up businesses. And when we are able to attract more foreign direct investment, where businesses across the world come to Nigeria to set up businesses, is going to lead to a lot of economic benefits. We are going to generate tax income. We are going to create jobs. When we create jobs, we are going to have more inflows into the pension industry. More inflow into the pension industry implies a lot stronger capital markets, because they will have to invest all of those funds. These are some of the elements in terms of benefits that may accrue to us if after the new GDP is published and we find ourselves to be a lot bigger, like $700 billion level. These are some of the benefits that possibly are waiting for Nigeria to be tapped into.
Mr. Tajudeen Ibrahim, I must thank you so much for your time. Really appreciate this. Director, Research and Strategy, Chapel Hill, Denham. Do enjoy the rest of your day. Thank you so very much.